Three stocks I'm buying February 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month. Three stocks I'm buying and why I am planning on buying those stocks in the upcoming month. The upcoming month being February 2019. Now, these videos always get a lot of eyeballs on them. They get a lot of views, so I just want to be very clear about a few things. Make sure you don't just buy stocks because I'm buying them. Make sure you do your own research. Also, as far as me buying into these stocks, okay, I'm usually planning on holding these stocks for a minimum of 3+ years. It doesn't mean it always happens, but at least that's the plan going in. So it's not like I'm just trying to place some short-term trades and I'm hoping these stocks like go up 0.5% and I'm like, woo, let me sell out or something like that. Like, these are long-term holds, and I'm always trying to buy companies that I think have a great possibility of at least going up by 2 times over the next 5 years. So I hope you guys enjoy this. As always, my favorite series on the entire channel. And by the way, today's video is sponsored by my private stock market membership group that is linked down there in the description if you're interested in checking that out. We have a private Discord now for that group, so all the investors, we can chat with each other, which is awesome. Also, a lesson library of 100+ videos, and I post weekly in there. You get to keep up with an account that has around $200,000. A lot of different reasons why you'd want to be in that group, so if something you're interested in, check it out, all right? Let's get into this. Alrighty, guys, first stock up here. I just started buying this one about a week ago, and I plan on making this into a very, very big position. They're actually going to be coming out with earnings very soon. Those earnings might have already came out by the time you guys get to see this, but I would love to build this one into a massive position of mine, and it is Whirlpool Corporation, all right? Ticker symbol WHR. What do I love about this company? Well, there are several things I love. First off, they are the biggest name in home appliances out there. They're the biggest name. Like, you think about some of their competitors, you think about GE Appliances, that's a big competitor, but GE actually, the GE appliance business is actually owned by a Chinese conglomerate now named Haier. It's not even owned by the actual GE American corporation now. You think about Samsung, you think about LG, some of those guys, those are kind of other, you know, competitors out there. But when you think about like the top dog in home appliances, generally you're going to think about Whirlpool Corporation, all right? I love that about them. You guys know I love a good, strong brand. Forward P on this one is under 8 right now. That's a very, very low valuation for this company. I mean, most times when I've tracked Whirlpool over the years, it's been at a forward P of 10+. Right now being at an 8, and I think a lot of those numbers probably are a little conservative, but forward P of 8, I think is a very, very fair price, or really an undervalued price to pay for a company like Whirlpool, okay? They also have a share buyback on right now, so they're taking a lot of shares off the market, which is going to end up making that EPS look better and better, which will mean they'll be able to up that dividend more and more as the years go on. But right now, as of today, dividend yield is nearly at 4%, which I love about this company because I don't really have any names that I could say are really, really strong dividend yields, you know, in that 4%+ range. Whirlpool is that company, so that's another reason I love them. Diversifies my portfolio, makes another stock that I can get a lot of dividend income from. This is a company that is not quite 100% recession proof, but it is pretty dang close, okay? When you think about the type of things Whirlpool sells, right? You know, dishwashers and refrigerators and washers and dryers and these type of things, right? There are some folks that go out and purchase those, like, you know, just because they want the newest and latest and greatest, right? But that's a very small percentage of the population. Most folks, when they want a new refrigerator, they go out and get that because their old refrigerator broke, all right? I remember growing up, like with my parents, like an appliance had to break for them to go buy another one, all right? So that makes a company like this, like it's a need-based business. Like, if your refrigerator breaks, like, you're going to find a way to get some money to buy a new refrigerator at the end of the day. So I love that about their business model, all right? Also, they're staying up on tech. They're putting a lot of tech, you know, you got to think about the Internet of Things, how everything's connected, and they're doing that with all their different appliances where you can control them from your phone. If you want to put on your oven, you know, 30 minutes before you get home, let's say you're driving home from work, you want to put your oven on, you can put that on and get it preheating and things like that. So they're staying up on tech, and they also own a ton of other strong brands out there. It's not just the Whirlpool Corporation you're buying into. When you buy the company, they actually own a ton of different brands. KitchenAid being one of the first ones that comes to my mind. You know, you can think about the KitchenAid mixers and whatnot. That's like the highest of the highest end out there that everybody pretty much has in their houses that cares about baking. And so I love the fact that they're a very diversified business model. So I really like this business model, and I really, really like it at the valuation it is. I owned Whirlpool a lot of years ago. It's probably like 6 or 7 or 8 years ago was when I first owned this stock. I hadn't bought it for a long, long time, and just recently I was looking at its valuation. I'm like, this is attractive, so I'm going to start buying in and add into a position. So that's the first one I really like, guys. Let's get into stock number 2. Alrighty, guys, stock number 2 I think has some of the biggest upside potential of any stock I own. I've been buying this one for several months, and I plan to continue to buy it for most of 2019, especially in February 2019. 2019, and that is Cirrus Logic, otherwise known as Cruisy Doozy, ticker symbol CRUS. So Cirrus Logic, let's talk about the negative with Cirrus Logic, and then we'll get into the positives, why I'm actually buying the stock. First off, as far as a negative, they're very reliant on Big Dog, okay? Who's Big Dog? That is Apple. They have a massive amount of chips in pretty much every Apple device out there, specifically the iPhones, okay? Not only do they have the audio codec, the smart codecs that actually go into the iPhones, but they also have 3 different amps, 2 that are actually for sound and 1 that it gives you kind of like tactile feedback and whatnot. So for that reason, most of their revenue as of right now comes from Apple, and guess what? Apple iPhone sales are not exploding right now. They're actually going to likely be down in 2019 versus 2018. At least that's the way it looks as of right now. We'll have to see how the rest of the year moves out, but as of right now, that's the way it looks, okay? So they're very reliant on Big Dog. That is definitely the negative as of right now, all right? But they are diversifying, okay? They should be in the new Apple Watch that just came out a few months ago, as well as the AirPods that are supposed to come out at some point in the first half of this year. It's supposed to be a next generation of AirPods. There are a lot of rumors that Cirrus Logic will have a chip of some kind in those new AirPods, all right? If they do, that could be very big. AirPods are just getting more and more popular now. It was something a lot of people laughed at when the device first came out, the AirPods, and now all of a sudden it seems like it's catching on in a big, big way, okay? So that is good diversity. Unfortunately, a lot of those devices are still with Apple, so, it kind of keeps them there. However, there's a big thing that's about to happen, all right? I'm like 98% sure that Cirrus Logic will be in the new Samsung devices that should be announced within the next month or two, the next Galaxy devices. From everything I've heard on conference calls and investor presentations and whatnot, without Cirrus Logic actually, specifically saying, oh yeah, we have chips in the new Samsung, like putting everything together, it sounds like Cirrus Logic will have chips in the new Samsung Galaxy devices, and that is big because Cirrus Logic has, they've been so reliant on Apple for so long. To break some of that diversity is a big, big way. Get a little bit in Samsung and have a second customer that's more than 10% of your revenue. That's good from an investor's looking at it. It's like, oh, they're not just relying on Apple anymore. Now they have Samsung as a big customer again. We don't know what chips they'll have in that. We don't know if they're going to have the smart codec or just the amplifiers, or maybe they have the smart codec and the amps. We don't know as of right now, but I'm like 98% sure that they're going to be in the new Galaxy devices that are going to come out in a month or two. And once those come out, we'll get to see the teardowns, and we'll get to see if Cirrus is actually in it. I'm pretty sure they're going to be in it, okay? That's big. That is a huge thing, not just because it brings in more money, but it diversified the business. They have a great CEO and CFO. These guys took this stock from a $5 stock, a decade ago, to now be where it's at, which nowadays it's like a $30-something stock, and I think it's way undervalued as of right now. It should be a lot higher in my opinion, but needless to say, they've grown this company like unbelievable over the years, getting in with Apple, and now they're at the place where they're kind of diversifying their business, not just in Apple, but they kind of realize like, oh, Apple's going to be big time and all these different mobile devices coming. They got in good with Apple starting around the 2010, 2011, and they've been able to stay in all the Apple devices and just keep building more and more content in those devices. A phenomenal management team with this company. Voice and audio chips are becoming more and more important, so all the stuff Cirrus Logic makes, all these voice chips and whatnot, they're just becoming more and more popular. Like, we expect almost everything to be able to talk to it, and those devices just get better. You think about the Amazon Alexas and all those different things, right? You think about Siri, all that type of stuff. All this type of stuff is not going away, and it's actually just getting more and more popular, which means Cirrus Logic is one of the only companies that is a direct play on all these audio devices. We expect our phones to be louder than we've ever expected them to be in the past, or our computers and things like that. They're a direct play on all that type of stuff, okay? Mics is going to be a big business. So microphones is a business they've been focused on for the last 5 years, as far as getting it to a point where they can actually, be a big, huge microphone supplier out there. It looks like within the next 1 to 3 years, they should be a big-time microphone supplier. I think they'll eventually get in with Apple, so which would mean that, they could have not only the codec in the phones, but also the 3 amplifiers, plus some microphones. I think that's going to end up happening. Cirrus Logic, they execute very well on this stuff. They've been working at this for a long time. I think it's almost time for game time, all right? Voice biometrics. A quote from CEO Jason Rode. He said in a presentation last year, voice biometrics is something that has a chance to double the company, all right? Just that alone. So voice biometrics can be huge for this company, which basically is going to be you being able to not be anywhere near your device, but be able to say a command, and that device can actually, read you you confidential emails or something like that, and it knows it's your voice specifically, which is a big thing. So when those chips actually come out, that is a huge potential for Cirrus Logic to grow, because right now if you know, say a command like that, like read my email or something like that, it's not going to do it. Why? Because otherwise anybody could, you know, steal your phone and then just get all your emails and text read. Like that would be a really bad thing, right? So this is something that is an absolute necessity with all these audio devices in the future, and they're going to have a chance to be the main player there, which is huge. Okay, that's another thing that's more like 1 to 3 years out. I think the earliest we'd see it is maybe a year from now, but probably looking more toward 2 or 3 years down the road. All right. Android expansion. So they've been so focused on Apple for such a long time. They just had all their engineers focused on Apple because that was like they were trying to play catch up in that game, right? Now they're at a place where they can have massive Android expansion. They've launched a very compelling amplifier product now that a lot of the players in the Android ecosystem are going to probably be going ahead and switching over to. So we should see massive Android expansion other than just, you know, getting in Samsung, which they should do. We should see them in most of the Android devices, a lot of the Chinese players. And lastly, 5G phones are coming in 1 to 2 years. What does this mean for Cirrus Logic? Well, there's nothing they're going to benefit from. It's not like a Skyworks Solutions where they're going to have extra chips that get extra content or something in a specific 5G device. The main thing is when 5G phones start coming, in my opinion, that will be the next super cycle in smartphones. And obviously that will push up unit numbers, and that's great for a company like Cirrus Logic, okay? One of the companies I think that has the most upside in the whole stock market over the next 5 years. We'll have to see how this plays out. They've executed so well in the past. I have a lot of faith that they're going to do it in the future, all right? Let's get into the last one, stock number 3. Alrighty guys, stock number 3, and I have quite a history, and that is Callaway Golf, ticker symbol ELI. So let me tell you a little story about ELI stock before we get into why I'm so bullish on the stock, why I think it has massive upside potential. First off, I started buying ELI stock around January, February of last year. And soon after I made that first initial investment, and I wanted to make it actually a much bigger position, the stock just started going up like crazy. Next thing we were up like 15% on the position, 20%. I'm like, dang, I want to buy some more shares, but I'm not buying up here. Next thing you know, it was up like 30%, 40%. And I thought this really stinks because I really want to build this into a really big position, but it was just going up like crazy. Next thing you know, it was like $24. We started buying in the $14 and $15 range. So I was like, I'm not buying any. Well, thank goodness, you know, the stock market just had a horrible back half of 2018. All stocks came down huge, and ELI was not an exception, okay? They came down a massive amount. And so now we're in like the $16 range. So now we're getting somewhat close to where I initially started buying the shares, and it's a very attractive valuation anytime it gets basically under $17, which is why I actually just bought a few $1,000s worth today, actually, all right? First off here, Callaway Golf, they're the biggest name in golf clubs, the biggest name in golf balls, if you don't know. That's their main core business out there, all right? Tiger Woods is back. You know, a lot of people laughed at me last year when I gave this as one of my bullish theses out there. I basically was banking on the fact that Tiger Woods would be back in golf. It looked like he was going to be healthy again, and sure enough, he was one of the top players in all of the world in 2018. And needless to say, ratings were way up for golf once again. Whenever ratings are up, that's good for the game of golf in general. They have had margin expansion solidly throughout of all of 2018, and they should have margin expansion going forward. Part of the reason they have this margin expansion is because they have product expansion. So it's not like they just rely on golf balls and clubs and things like that like they used to. Now they have acquired OGO a couple years ago, Travis Matthews as well, and now they should close out on the Jack Wolfskin acquisition here within the next few months. And so it's a business line that's not just dedicated toward just, oh, we sell golf clubs and we sell golf balls. Now they're big into clothing and apparel type products, and that's a real big driver for their business now. And that is making profit expansion happen. So profits expanded in a massive way in 2018. 2020 profits should get back going in a big way for this company. 2019, I don't think, as a year, if you're looking at the full year, I don't think net income will be up for the company. The reason being is they have this Jack Wolfskin basically acquisition that they have to get done. And whenever you acquire another big company like that, you have a bunch of one-time costs that kind of kill net income for a quarter or two, and then you get back on the right track, okay? So if you're looking for overall net income expansion, you're probably looking at 2020 or at least toward the back half of 2019. 2019, all right? They have over a 14% ownership in Topgolf, which is this massive Goliath places that they build all over the place. I think there's around 50 locations now, and these are really exciting places that you go hang out with your friends. It's a big thing for people of all ages, but I noticed, you know, anybody in that let's say, you know, 18 years old to 35 years old, I noticed that's the real big segment. A lot of folks love to go there. I love to go there personally. And so that ownership stake is just increasing in value literally as the months tick on because Topgolf is just getting bigger and bigger around the world. They're building more and more locations, and those places make a lot of money, okay? So needless to say, that's just something that sits over there on the balance sheet that is just going up in price as it goes up, okay? The great management team, they've done a phenomenal job, you know, rebuilding this business coming out of the recession. Chip Brewer has done phenomenal over the past few years of getting this business on the right track, getting margins to expand, getting the products to diversify from just, you know, selling golf balls and clubs, and also doing a phenomenal job of keeping them in leadership positions in a lot of those you know, products, but also, you know, expanding the business into other things, making an investment like Topgolf and whatnot. I really love the management team over there at Callaway, and less competition, which is always a good thing. So basically coming into the recession in 2008, 2009, there was a ton of competition in golf and all these type of products and whatnot. And what we've seen coming out of that we saw, you know, more and more competitors drop out. Even Nike dropped out a couple of years ago. And so less competition is a good thing for Callaway because that just means more people are going to buy their products versus buying a million different other companies that might have tried to push prices down in the past and whatnot. I love this stock, and I'll definitely be buying more of it in February 2019 and probably for most of 2019. All right, guys, hope you enjoyed this. As always, hit a thumbs up if you did. Thank you for watching, and have a great day.